Morning everybody, and welcome to today's morning market. So today I'm going to focus in on the oil price, but most importantly, what does this mean for your money? Okay, so let's look at what's been happening recently in respect of the oil price. And what we saw is the oil price peaked out last year in mid-September, so it peaked out at just over $93 per barrel. And then if we look at where we are right now, we're at just over $73 per barrel overall. So what's led to those falls in the oil price? So when you see a conflict come through in the Middle East, quite often you would expect that you would see a higher level of oil prices come through, but you haven't seen that overall. So what are the key factors in play? So when oil was trending above $90 per barrel, what we saw is more countries start to look to bring production online. So particularly the US started to produce more oil. This meant that it was more difficult for OPEC Plus. So OPEC Plus is the main oil producing nations to control prices by cutting supply. Secondly, what we also saw is that there was a reduction in demand from China. So China is the largest consumer of oil within the world. And then finally, what you're also seeing is US gas prices are falling. So what you can see is a lot of people have the choice between gas or oil when heating. And obviously if gas prices are falling, then that means that also puts pressure on the oil price as well. What have we actually seen in recent days? So that's what we saw since September to now, but actually what have we seen since the start of the year? And you've seen quite a bit of volatility in the oil price come through. You know, if we look yesterday, Brent was up nearly 2% on the day, and that built on what was a strong trading session the previous day. Now, what's led to that is that the Sharara oil field in Libya actually stopped producing oil, and that's because of the political protests that are taking place there. So that took out around about 300,000 barrels per day of production. I guess, what's our take on this? We've discussed a lot around a higher oil price over the last couple of years, about how that fed into the inflation calculation overall. And I guess, we talked a little bit earlier when I was talking about how you would expect a conflict in the Middle East to lead to higher oil prices. But what hopefully I've explained to you is that that's just one single factor. And there are other factors that are driving the oil price overall. For us, we don't expect the oil price to significantly increase higher from where we are right now. However, as always, we will monitor events. What else has been happening in asset moves over the last day or so? Pretty mixed day in equity markets yesterday. The US was the only main market to finish in positive territory, and that was really a rally in the technology sector that buoyed prices overall. Later this week, you've got quite a few big companies reporting, particularly the US banks. So we've got JP Morgan, we've got Wells Fargo, and we've got Bank of America reporting this week. In currency, probably the move there is a little bit more strength coming through in the dollar after a lot of weakness that we saw at the end of last year. And all eyes are on the US inflation data that comes out tomorrow. That's everything from me. I hope you enjoyed today's morning markets. I really look forward to speaking to you soon. Thank you.